Hey, good morning, good morning, good morning, good morning. How are you doing? Who is here? Who is here? Who is here? Good morning, good morning, good morning, good morning, good morning. How are you doing? So I'm just checking something here, then we proceed. I'm just waiting for some people to join. Then we get it. We get into the work. We get into the work. Petro, good morning. How are you doing? Komnagani, how are you doing? Lynn, how are you doing? Good morning. How are you? It's a very beautiful day. It's a very beautiful morning, right? Yeah. I think you have been waiting for something to just happen to this market. I don't think we are there. I think so. We are there. We are there. Things are really moving smoothly, and this is indeed great. This is great. Just says great. So if you're joining this, ensure number one, the first thing that you need to do here is to make sure that you like this live, and there's a chat button right down there. Make sure that you click that so that we can start doing this, so that we can start now the analysis. Things are really moving so good. And for those who can remember yesterday, I want to show you something here. So yesterday I had some buys by orders, but there are many actually. Yeah, but I'm going to close my last one, like the last entry, like the last one, and several entries. So we are going to talk about what we experienced yesterday, what happened, and why is the market moving that way. So it's a beautiful, beautiful thing. You see this one, this is actually the last entry, so I'm going to close that one. You see this one, is it here or what? Yeah, the profit that we have here, yeah, this one. So I'm going to close this. That is what we end, and I think it's now amazing. I think I can just end some good entries all the way down, and then I just close almost a half. Remember the position that we were to take, the entries that we were take from the market. So that is the one I'm closing here, so that at least we can be neutral. Wow, an amazing day. So we have started the day with an amazing result. Remember, the market now was absolutely trading, like there was that trend, or now the market was really moving. Let me just open the chart so that we can get started right away. And remember yesterday yesterday I shared something very important, and that is where we are going to start. We have opportunity. This is Friday. Today we are going to be getting the CPI, so we might be checking as well on the CPI and see what do we have from this market. Do we have some advantage to take from this market? We are still going to see that, right? Now this is a chart. This is the chart. This is the chart. This is the chart. This is now the chart. This is now the chart. This is now the chart. Now, if you go to yesterday live that you were trending here, the one that we were analyzing on yesterday, we discussed about something very important. We talked about something very important, and this actually has to teach you something on how we are just proceeding on this. That common sense is very important when it comes to trading. It's not all about what you see. It's not about all what you see, but also you must use the common sense. Every time maybe you are analyzing the market, you must use the common sense. Common sense is very important when it comes to the analysis, specifically analysis, because this is really going to help you a lot. So common sense. Let me set something here. I don't know. One minute we get started. 1 minute. Wow. Mm. Now let's start here. That is where we left yesterday. So that is what I want to get us started from there, because you're going to capture something. Like you are going to get something from it. Like we are going to get something from the chart. Okay. This is great. Okay, 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 okay. Hey, Carlos, good morning. How are you doing? I see you here. So this is great. Huh? Now let's start where we left this yesterday. So yesterday, remember our analysis where we started and where things are right now. Remember now yesterday we were talking about this zone that we have here, which is this zone here. And you remember we have been talking about these lines. We have been talking about the market to come all the way to this area here. And we're saying common sense is very important because of how the market is really going to be doing. I also posted another video telling you that this area here is really going to be of important. It's only that we have been connecting two lines, but now I see how really things are really going to unfold around this area here now, because now the buys have really started again. You see now how the market was moving, and I think there are so few people, like many people, who actually wanted to buy around this area here, which is the area we lightened yesterday around the top of this corner here, which is this area here. So we are going to connect and see what we might be getting from these prices here. You see this corner here. where we're talking about people buying here and then getting liquidated all the way from down from the top here, which is 50.44, in the market moving all the way to this area here. Now the market has really confirmed that, and you can see the candlesticks are really amazing here. And I think there's a very big gap that was been created here. I don't know whether it was already been filmed. We are going to see that. And let me see where we are going to be moving. This is really going to be amazing, because if you've been following us off from the top, then you really need to know that this is simple. Let's take it there. The maximum we can get is absolutely right here, which has already been filled here, but at least we get to the point where we have this. Now you see that, you see that. Now one of the my buying position was actually at 49.22, around 49.22, and also this corner here that we really have from the top down. And this was really confirmed by a lot of things that we are talking about. Remember this zone that we are talking about. I don't know whether you remember us mentioning this. Do you really remember us talking about these things? Because yes, that is yesterday. I think, whether it's not yesterday, but I think we were marking these areas, and this should be very simple for you now to digest, because I really don't know whether you are really getting these things, because I'm making them to be very simple. I'm making them to be very simple. The other day, before even the market touched this region that we have here, and I told you the market might be visiting this area here. Why? And that's why you see the market touched the exact area and moved up. Remember, number one, we talked about this. I told you the market, look at this. This area matters. Already again, do this area matters. Again, this area matters. And that's why I do this line around this area. And that is what we got. If you can actually go to previous trends that you've been doing, then you'll be seeing that. And you can see this is actually 48.99, almost to 49, and now we are for $15 up. And that's why I'll tell you that the market, the one moment the market starts selling, is really going to sell very fast. So that is what you see from here. And you see now, analyzing the market is very simple, but common sense is very important sometimes. Common sense is very important, but really this has been very simple, what we've been waiting to see from the market, and what we got from this market. I want to make sure that everything is really working here. I don't want to be talking here and then the voice cancelled, because I see different things. What's happening? Got from this market. I want to make sure that everything is really working here. Yeah, definitely. Now you can see it's just happened like that. So remember, the market actually been trending here for many days, and I told you this is going to be the trap, because the fast, how the market is going to be moving fast. That exactly what happened to this market, and you can see exactly what happened to this market. And that's why you now have to be very careful on everything we're just really saying here. I could not have sold from this market. Yes, selling was really a good idea, but I know there are some people who actually sold around this area. I don't know how really, I don't know, sometimes you people it's crazy. Someone was selling at 50.69. Actually, someone sold at 50.69 here. You're saying that, I wanted to test your strategy and all that. It's very nice, but make sure that at least when you're doing that, you're doing it on the demo account. Maybe if it is testing, or maybe you have bigger account. Sometimes, unless maybe I give, there are some entries that we normally have that are very important, like this area here. So that is our plan. Our plan was now to buy from this zone here. So when you saw the market approaching this zone two times, that could have actually been a very good idea for you now to place a buy. And sometimes these things you really need even to act on your own, because not all the time I'm going to tell you, you know what, um place your stop loss here, place your stop loss there. Sometimes also you need to be very sharp and know the specific place to have your stop loss placed, and that is really great. So that is what happened to the prices of gold. Now we are going to see what is going to happen. We are going as well to touch on CPI. CPI is today that's going to the data that's going to be released. I think it is somehow late, but we're going to be checking on that because really that is a really also very big impact towards this market. So I had my entries around this area because I know I had already given you the enough information that you needed for you to have these entries at this area here. So that was really nice. So if you missed an opportunity like that, I really don't know, because you have been waiting for 3 days. How come that you have been waiting for, I think it is 2 days, once where the market was actually trading around this area here, and I was just consistently telling you the market is still going to be moving down. So those are the most important thing that you really need to understand, because sometimes you can miss an opportunity, the big opportunity like this, to buy from 49.79, and you miss $100 move, which was actually, we can even say this actually was a sniper entry, because you just buy from this zone 49.05, and you can see the market went to 48.81. You just buy, you just scale in, the way we have been just saying about this, you just scale in, and then this becomes so amazing, just like that, the way you were just seeing. Now where is the going to move after this? This is just very simple. There's no gap that has been created here, apart from when the market moved very fast around this area here, then the gap, there's no gap. I think the gap has also been filled. But when you look at this candle that moved all the way to this place here, now let's just come back to today analysis. This is going to be very simple. Then we got the CPI, because this is what we're going to be happening. So if you're planning probably to buy right now, let's see whether you have this opportunity with you, because this is for a time frame. Now checking on these candles, you see this candle moved on so well, almost to fill the gap here, almost to fill the gap here. Sometimes when you see a candle like this, you don't really have to buy at the top, because if you're going to buy at the top here, then remember this candle is going to fill this gap that we have here. So if you're even planning either to buy, or maybe the perfect opportunity to buy, either it is 1 hour time frame or whatever time frame that you're using, the best time is to wait for when this candle comes to this zone. And the amazing thing that you can see is that now these candles are really touching this line, and now makes it even more stronger the more even we move on to this. So let me bring it here. Let me max, I was maximizing on this, let me, yeah, something like that. Now just look at that, now that is what we are really getting here. Okay, that is what we got. Just simple like that. Now the perfect opportunity was either to buy again when the market was at 49.45. I was telling, like, I think it's last night when I was telling people that make sure at least you buy from this zone, which is around this area here of 49.40, and you can see at least we move almost to 5,000, and I think that was really great. For this. So now you can see the prices are really coming down, and let's move to 1 hour time frame so that you can see the alignment that is there. Yeah, so the prices you can expect now to come at least to 50.10. So that is what you can see, because you can see the market achieved this move down, and then we got a reversal around this area here. So it is expectant, the candles that we have here. So now expect this market at least to come to this zone that we have here, and probably we get back to this, and then we continue either to test this zone again, that area. Let me wind it up here. Yeah, so that is what we might be getting from this market. We just expect this market to come all the way to 50.13. 50.13 is what we're going to be getting from these candles that are moving just like that from lowest time frame. That is what we see from this, but expect at least a reaction around here. So you can see it is really very close to once the rejections that you're waiting to see from this market around this corner here. That is really going to be happening. So it's really going to be happening, right? Let's move to the next one. I want to have different, so I want also to check on the currencies. That is going to be important. Allow me to open all my tabs, that you're going to use, so that it'll be very fast for us now to do this. Now that is what you can now expect the prices of gold to move at least to 5013, this area here, at least 512, and then we just get back before we move even to the top. And that is from the lowest time frame, because even if we move this to, let's say, even 30, I move this to 15. I think some people have 15-minute time frame. You're going to see the same pattern. I think there is no really no big difference from this, no bigger difference, although the market is really slowing down, really slowing down. And that's why you see now there's a possibility now the market is going to be, the reason I'm targeting this area here is because, number one, this is going to be at least 51% to 60% of retracement line of what we got yesterday. And another one is right here. You see, this market can absolutely do this, and we can be getting now this market moving like that, like this, and we can be getting it moving like that. So at least we are up like that, so we might be touching this before the market proceeds to move all the way to the top, right? Now remember, today the market might be slow, specifically gold, until the time, and that is going to be due to this, due to the CPI. Okay, do the CPI. So you have the core CPI, and we also have the core MMM and the CPI yearly. So the most important is this. So the most important is this, the CPI yearly. So year to here, right? So this is CPI here to here, and it's mostly used by Fed to check where the inflation are really and how the inflation are really performing. You can see from 2.7 and predicting it to move to 2.5. Are we really going to be getting below that? Because this is crazy. The 0.3 predicting to remain the same, this to remain the same. We are going to see, are we going to get that one? Because remember, we've been getting surprises from this market. So we are going to write that down so that we can just know what we expect on the CPI side at that time when it comes, because that is really going to be very important. So I'm going to write this down. What is bond, white bond? So let me have a white bond here so that we can just analyze this and see what do we have really to check on this, right? Remember, if you're enjoying this, make sure that you like, make sure that you subscribe. This is what we do daily, and also join us every single day trading. So I'm going to have my entries right there, so I'll be showing you. We'll just also be checking on the currency, how we performed, and which currency did we check actually. I need to know also which one is really performing when it comes to technicals, which one is performing good, and I'm going to really check on that. So let's see on USD JPY. So let's see the currency that the pairs that are really doing worse this morning, which pairs are really doing worse, and let's see which currencies are really doing worse. Yeah, so USD is gaining strength, and JPY is just losing it. So that means we are getting the bigger momentum of this pair moving up. So that is what you're getting. So if you go to the charts, you're going to see that you're going to see at least a recovery for this pair, which is USD JPY moving up, and that is what you are getting. And we can still reanalyze this and see the trend of what we got from this market. Remember, after now trending from this area here, we were talking about this market touching this line, this bigger line that we have here. And yeah, so we are waiting to see. There's analysis that you're talking about the breakout structure yesterday. That is what we talked about in this area here, and you can see several orders being implemented into this market, though the buyers taking it, the buyers making it. Now we need to see for this market in order to say that it's really moving up, but because you can see the orders are really good here, like the market is moving up. Yes, the structure, in terms of structure, in terms of how the market is structured here, you can see we're really moving up. But what is really happening, what is really happening towards this market? Is this how it is really moving after touching this? Need to be very careful. Now for these prices, let me move to 1 hour time frame. I think there's a lot of noise. Now talking about 1 hour time frame for this market now, so that we can confirm that how the market is really moving, we need to scale it above here. We need to get this market here, but you can see the rejection that is happening at the top like this. Just look at that. This is what you get from USD JPY. That is the market that's getting rejected around that area here. Now for us now to confirm that it didn't, we are moving to the top here, then it means we need to get higher prices. Let's say the price has to break at least this close here, and then we just test this zone as we go up. So that is how you can just know the market is ending upward. And because there's so much strength on the strength is really that much when it comes to this currency right now, this area seems to be really confirming, like we are getting rejections here, and the market seems to be doing all this, and we might be selling from the top here, because now that is how the currency. Actually talking about the USD JPY, let me close some positions. I have some open position that I need to close. Yeah, yes, like that. I had some positions to close. Yeah, so that is what's really happening to this pair. So maybe from this area here, let's see, let me go to 4 time frame alignment. I want to see this clearly. Yeah, you can see that one. The market is still on the downtrend, but until you can see the currencies are still gaining it. The dollar is gaining it. JPY is really moving down, and that is what we are getting now. The price is at least moving on the upper side now, because this area matters a lot. Now you need to move to the lowest time frame and confirm this with the candlesticks on how we are really going to be forming on this. You can even move to 15-minute time frame. So on the 15-minute time frame is going to give you that good clue on how the market is really going to react towards this area here. But you can see at least this structure is really nice from this, and the market has already tested this, so we don't need this candle actually to stay. You can see we have already 153.5. we need this market to stay up. We need this market to stay up. So this is the top. But looking at these weeks, you can see those are count now the rejection. The market is rejected on the upper side, and now I write this really down. So once you see the prices actually breaking this down, just know now it's a reversal that we are getting, and there is probability now this price is to move up. Now that's how you can just use this, because now of the strength that we have here for the USD JPY. I wanted us to talk about the CPI because of the time. I wanted us to talk about the CPI just because of the time, because I see this is really going to be amazing today data, because it's going to be very amazing and more surprising. So today data is going to be amazing and even more surprising. So today data is going to be more good. Now, let's talk about the CPI and the predictions that we might be getting from the CPI today being on 13th of February 2026. Now, yes, we have the CPI here around 2.7 is 2.5. So they're expecting the inflation to come down, to just reflect down from what we've been getting here. So this matters a lot because this year to here is the one that is used by the Fed to decide on interest rate decisions. So simple, when we have this law, it is actually going to be rent a week because it means that inflation are coming down, and there is no need to put the interest rate up or to stay hawkish, right? And that makes the dollar weak. Okay, if we can get above than expected, can be 2.6 or 2.7 again, then that is going to be positive, and that means it's going to be bigger than the forecast, and that is going to be positive towards the dollar. If we can get 2.8, 2.3, that is going to be crazy because it's going to show how the inflation are really moving down. Now, before that, there is what we call the leading indicators. The leading indicators are actually the same thing that we talked about. It's the same thing as how when we talk about the RSI or RSI, there are some indicators that will show you the past, like after the prices have moved, then those indicators are really going to show you like how the prices moved, and that is different. Now this is leading indicator. So CPI is leading indicators towards interest rate decisions, all right, towards the interest rate decisions. So this is CPI. It is CPI. It is a leading indicator towards this. So this is how you just write it down so that we can have all these scenarios that we have to know then why we get all this, because everything has this kind of leading indicator. Right now we have, I want to write the CPI here, simple, but remember the final one is absolutely interest rate. So I write just I and R. So the final decision is interest rate decisions. So when you see the market moving, just know one thing: it is because of what? It is just because whether the CPI becomes low, the key area of what we are forecasting, the reason you see dollar strengthening and moving down and up, is just because of the final result, which is the interest rate decisions. Everything we see here end up thinking of interest rate decisions. Is it really going to cost this? So it's just something like a chain. Is something just like a chain. Now these things really moved. Now we have something that happens even before this. All right. So remember last week we got what we call hourly earnings, and we were just doing all this. So this is what we call hourly earnings. So hourly earnings, this is, and after that we got what we call the GOL. So GOLTS, this is a job opening, is another indicator for hourly earnings because they just define this. So we have unemployment claims as well, is a leading indicator towards the hourly earnings, and the hourly earnings is actually an indicator to the CPI, and the CPI is an indicator towards the interest rate decision. So that is just like a cycle on how really things move. So in case maybe you want to know how the market are really moving, what would you expect from the CPI? These are the kind of indicators that we should be looking at. So we are going to start and see what we have here before even before now the result that we have 2.5. Are we going to be getting higher than that? Because we have these things that we really have right here. Now Let's start here. What do we have? For example, you've talked about the hourly earning, which is very important. But remember also, apart from these prices here, we have hourly earning, we have PPI. These are actually the leading indicators towards the CPI. They are absolutely very important. We can as well look at the that is the crude oil, right? What is happening? Crude oil. These are the most important thing to check around this area here when it comes now to analyzing these ends. And also remember also the ICM, which is a manufacturing index. We'll be checking on that. Free trade are very very important when it comes to this, and this is really amazing. So we can just check at least the three: hourly earnings, PPI, and the crude oil resort. And I think we will be good to go, and you can actually even know the prediction for the CPI. This is really going to help you, because next time you're not going to be struggling with knowing on how the market is really moving and what we are going to be getting from these prices. So number one, what can cause inflation? What can cause inflation is, number one, what we call the hourly earning. We're saying about the hourly earning in the US is when people actually get even paid more, like honey companies are willing to pay more, and the price and the wages actually is higher. And when people have money, of course you expect them to compete for the available goods, and you expect them to compete for available goods, of course, to cost the inflation. If you can afford to view brand, of course the price of brand is really going to be up. If your social has money, you have your money, your friends have money, of course you expect the prices to move up. That is obvious. So that is obvious. When these prices, when you see something just like that, then you know that now the prices are really going to be the prices or the CPI is really going to be, it's actually a threat towards the inflation. It's absolutely a threat towards the inflation. That is the hourly earnings that we have. Hourly earnings. So when you see this moving up, of course, it's a direct relationship with CPI. And I think yesterday there's something that we missed, because I don't know where my hand was, but we interpreted something wrongly about the that was we were to get the hourly earnings, but we meant it was really 100% sure, but it's only we saying the opposite of just some ones of what we are just expecting, and it ruined everything. So that's what I want us to be very slow on this, so that we can just be accurate on this. So these are hourly earnings. We need to be checking on this, because it is directly proportional to the CPI. So once you see people having more money, these hourly earnings, and I say the prices are really going to be slow. So in case you're trading gold, just know the prices are really not going to be that good. All right. So when you see hourly earning increasing, just know in the future we might be having the CPI actually moving up. Now, what is a producer price index, which is actually the strongest indicator towards the CPI, right? Um, when you see, and actually you have to just check this at least, let's say even 2 months on how the PPI actually been performing. Yeah, on how the price are actually been performing, because this is actually producer price index. This is actually from the manufacturers, like from the producer side. Sometimes you see the production side. I'm going to summarize this, because I think I and taught a lot of things from my book here on there's a 30-minute course on how I was teaching about the producer price index. I was teaching you about how to interpret this. Let me check this for you. I don't think whether I have it here, but that is what I was just teaching you. So in case maybe you really want to know these things in details, how they are really connected all the way to CPI, then of course you're going to be checking something interesting like this. Now, you see, we have our earnings, and then we have the PPI, which is price producer index. Of course, when companies um, make more money, like when the company actually spend more amount of money in terms of productions, in terms of all doing when it comes to the production cost, Of course, what they are going to do, of course, is that they're going to increase the prices of the commodity, because they are going to pass the price of the commodities of the production to the company. So when you see the PPI increasing, producer price index, of course, what is going to happen? They are going to pass the prices towards the goods, and that is what causes inflation. Inflation is just very simple. This year we got a Brent moving at 100. The next year you see it is 200. Of course, that is inflation, because now you are buying the same brand but with a different amount of money, with a higher money, with big money, but same goods. So the value of money has really increased, and that is what we are getting here. Price producer index. So when you see this PPI has been increasing over time, just know it's actually going to cause inflation, specifically for, maybe it's going, if it's going to be more for the past 1 year, you're going to see it's affecting this. And if you're going to see it affecting, or maybe you're going to see it like in the past 2 months, then of course it's going to affect the month to month CPI that we really have. But remember, we have a CPI that excludes goods and food, energies, and all those, the one that are very volatile. But these also, those really matters a lot, because they normally move market, not long term but also short term. Like when you go to the trending, and then you're going to see that increasing, right? Now, that is now the difference that you see here, because we have this one. When you look at the core PPI, it tells you normally this is change in price of goods and services price by consumer, excluding food and energy, right? So when we check this, for example, when it comes to the energy, when they come to now this, it means we need to have, because they're expecting actually to move up this one, specifically this, because in the past we're going to check on how some of things are really been performing. And of course, you can one of things that in our country, let me even talk specifically about my country, one of things that really moves the prices of the goods very fast, of course, we normally monitor the oil prices, that is the petroleum and all those things. So when the price start moving up, then we realize, of course, maisha imeanza kuwa ngumu, like the inflation is there, because these things actually tend to move everything up, and that is really crazy. So what happens now is we're going to check on the crude oil, because this is really important in the US. So when the fuel prices is up, of course the transportations is up, and the food prices is up, and of course it causes the CPI to be up. So oil spikes usually hit CPI within 1 to 3 months later. So you can just be looking on how the oil has been performing. If the oil prices has actually been moving up, of course expect the CPI to be very high. So at least when you check at least those three major indicators, those are really three major indicators that are really very, very, very important and very critical. Price producer index, crude oil, and average earnings. Of course, there is another ones like ICM, which is manufacturing price index. It's actually a hidden pro indicator, because it shows what companies are actually paying now. Like when you see the spiking, it's actually also directly um, it's actually also directly proportional to what is really happening to the market. So those, all of them, are absolutely directly proportional to what we are really getting here. So when you get these three of them, these three, and we can actually put even ICM here, because ICM, all these three are directly proportional to the CPI. So in case you get this rising, just know the CPI is as well increasing. That is what you're getting from this. So in case you see this, just know also the CPI is absolutely increasing. Hello? Yes, yes. What's on? Mi niko salama, labda wewe sasa. Yo. Now let's proceed with this. Now, where did we leave this one? Now, I want us to see something different here, because I think yesterday we got very high data around here for the positive. Let's see, that was an employment claim, unexpected 227. I want to see. This was Wednesday 5th. So average hourly earnings, want us to check on that few. This is January 9, 0.3, 0.1. So this is a mixed result, although these actually been increasing. Is it a decrease from the past months? November 20, 0.2, 0.4, 0.3. This 0.4. So we check on let's see something here. US oil. I want to see. I think this is the reason we see now. Maybe let's say the prices for the current the price inflation actually expected to come down. You can see actually the prices for the crude oil has actually been moving down, like from 65, and now we are talking about 62. That's the price actually coming just down. And when the prices are really low here, yeah, so that is the reason. So allow me, so I think I disappeared for some minute, and then we just disconnected from everything, from everything. So I think now for this inflation to come to 2 point, this, I think there's a lot of combinations for this. We might actually be getting, remember we've been getting good surprises for, where is the calendar here? Just go and check all those information and not be able to go through all of them in terms of checking the update and all that. Just check these three. Make sure that you check these three, how the has been performing. Hourly earnings in the past at least 3 months, PPI in the last 3 months, the PPR, the crude oil in the last 2 months, and also the ICM. All this combination, if they're going to give you up, then just know, of course, we are going to get a slight above the target of the CPI that you're expecting to get here, which now may translate to this. So if you're going to get high, it's going to translate higher CPI, which means now hike or the strength for the USD, and can actually push the prices for the gold even down, and the USD JPY is absolutely going to be moving as well up. So it's going to be moving opposite. That is what we're expecting from this, and I think this is so great. This is amazing. So today again at 4 p.m. Around 4 p.m. Make sure that you are here again around 3 p.m. Make sure that you are here so that we can reanalyze the market and go through everything that we have talked about here in a relaxed manner. I think yeah, so my mood is down. I'll see you again probably in the next few hours. Let's say 4 p.m. Make sure at least you are here 4 p.m. We're going to check on the CPI in more details and what we expect if we can to get a good entry. But for now, until then, I think the prices are really going to stay stagnant, like not that big move because of the anticipation that we are going to get. Have a good Sunday day.